Today we're going to discuss chapter 9, which is the long-lived asset, which is accounting principle and additions by YD Plus. So we're going to start with the learning objective. There's 7 of them. Let's calculate the cost of property, PPE, which is the property, plant, and equipment. We call it PPE. To simplify, apply the depreciation method of PPE. Equipment factors to changes in terms of periodic depreciation and calculate the revised depreciation of our equipment. Demonstrate how to account for PPE. Record the natural resource transaction and calculate the depletions. Number 6 is identify the basic accounting issues for intangible asset as well as goodwill. Number 7 to illustrate the reporting analysis of the long-lived assets. Okay, let's long-lived asset. We call it the PPE. Determine the cost of depreciation, revising depreciation, and doing a disposal. For natural resources, there's a cost, depreciation, and disposal. Natural resources like timberland, mining, operations, something like that. Okay. Calculate the long-lived continuing intangible assets and goodwill, accounting for intangible assets, and then a set for definite and indefinite life and goodwill, as well as the statement percentage analysis. We're going to dive into detail here. Alright, let's look at the learning objective number 1. Calculate the cost of PPE. The long-lived asset of a company is used for production and sale of the goods and services. The characters will have a physical substance in terms of definite size and shape, for example, plant, equipment, and have for use in production or supply goods or services for rental of others on financial purposes and not intended to sell customer. For example, if I have a samosa shop, the production will be like stove, the PPE will be like stove, cooking utensils and the details, as well as others. Okay. We expect to provide service for a number of years, divided into 4 classes, which is the land improvements, building, and equipment. There's 4 classes there: land improvements, building, and equipment. In terms of the determining of costs, include purchase price of non-refundable tax, less discount and rebate, or cost necessary to bring assets to location and made ready to use. Obligations to remove the destroyer when it is retired, such as asset retirement costs, this cost including our capital expenditure. The benefits for future periods, costs that benefits only current periods are expenses of call operating expenditure. Cost of land includes purchase price, closing costs such as legal fee and survey, cost of preparing land for intended use. Land improvement will be including structural addition to land such as driveways, sidewalks, fences, parking lot, landscaping, and have a limited useful life and recorded separately and depreciated for the land improvements. In terms of building, include costs related to purchase constructions. If purchase include purchase price and closing costs, costs to make building ready for its intended use, such as remodeling and repairs. If constructed, include contract price, architect fees, building permits, interest payment, during construction, excavation costs. Okay. In terms of equipment, there's both categories that includes delivery equipment, office equipment, computer, machinery, vehicle, furniture and fixtures, and other similar assets. Okay. It also costs include charges paid by choosing, include purchase price, freight charges and insurance during transit, assembling and installing and testing. Allocating cost multiplier property PPE purchased together for single price, such as barcode purchase. Okay. For example, you buy a stove, let's say you buy 4 or 5 of them for a single price, we call it basket purchases. The total cost is allocated to each of asset in proportion to its relative fair value. The significant component is that it's part of the cost, is part of an asset that have a cost that is significant in relation to the total cost of asset, and these components are depreciated separately, known as the component of depreciation, and has the same process to allocate costs as used for basket of purchases. In terms of learning objective number 2, apply the depreciation method to PPE. In terms of depreciation, systematic allocation cost to the cost over a long period asset useful life is the process of cost allocation, ordering of the fair value, does not accumulate cash for the replacement of the asset. There's 2 models available here: the cost model, which is commonly used, and the revaluation model. In terms of calculating depreciation, We must determine the cost of asset, cost to acquire asset that make it ready for use, and it has an estimated useful productive life. It can be expressed in terms of time, unit of activity, or unit of output. This is based on the estimate of use, obsolescence, and other relevant factors. The estimated residual value will be the estimated value of asset at the end of the useful life. There are three alternative methods, which is the straight line, diminishing balance, and unit of productions. Let me grab a cup of water first. Excuse me. Management chooses method that best matches that pattern the consumption of the asset and future economic benefits. Depreciation method, instead of estimated useful life, residual must be viewed at least annually. So there's a straight line here, diminishing balance, as well as unit of productions. Let's look at the first method, which is straight line, which is the most commonly used. Depreciation expense is constant every year of asset useful life. Depreciation amount, the cost to be depreciated. For example, you buy a truck from 2020 to 2028 for 5 years. The depreciation for 5 years is 4,600. Cost here 25,000. This is 2,000. The depreciation amount is 23,000. So the depreciation amount here 20,000 is still useful life for 5 years. This is the depreciation expense will be 4,600. This is an example of a truck given to you. The cost is 25,000. The salvage value is 2,000 because the residual value divided by 5, the cost per year will be 4,600. The diminished balance method, it's basically what they call it mostly double declining method. It's the same kind of truck here. Depreciation expense based on the carrying amount, cost less than double depreciation. Depreciation rate remains constant, but its expense declined by each year. So depreciation 40%, 25,000 times 40,000, 10,000. Most people, if you are a small company, you would like to use this depreciation expense on any car that you buy. It's called 10,000 there. Okay. Excuse me. In terms of unit production method, useful life expressed as the total unit of production or activities. Must estimate the total unit of production that will be obtained from assets such as cost 35,000 minus residual value 2,000. Residual amount is 2,300,000. Residual amount is 20,000 times divided by total unit production, which is 200,000. Which is the precision amount is 0.15. This is based on the kilometer. So you get here up and down, based on the usage of the unit production in terms of the mileage on this particular part. This unit amount per unit will be 0.15 times 30,000 km per year. So the cost will be 3,450. So step 1, step 2, step 3. Now this method is based on the production method. In this particular truck, it will be based on the mileage. Okay, so that is the third one. And then partial period depreciation. When asset purchase part ways through physical period, it is necessary to prorate the annual depreciation for the part of the year that the asset was used. It is normally rounded to the nearest amount. In terms of learning objective number 3, explain the factor that cause changes in the periodic depreciation and calculate revised depreciation for PPE. So, in terms of revising periodic depreciation, annual depreciation must be revised if there are capital during the useful life of an asset, impairment in the fair asset value. For impairment means there's something that can affect the fair value of the asset. For example, if the car suddenly has a problem with the engine and it has a lower value of the asset, it has to be updated accordingly. Changes in asset fair value when using the refusion model. Okay, changes in appropriate depreciation method. Asset is based on estimated useful life or residual value. Expenditure of an existing asset are classified as operating or capital income. Ordinary repairs, operating expenses, which is the cost to maintain operating efficiency and protect the life of the long-lived asset. It usually a small amount that occur frequently and debited to repair expense as it occurs. Okay. Capital expenditure using useful life capital in addition to improvement. Capital expenditure cost is incurred to increase the efficiency of productive capacity or expect useful life of the long-lived asset. Its useful material in the amount that occur infrequently and debited to the long-lived asset affected. Long-lived asset impairment is considered the impaired amount when carrying amount greater than the assets of the recoverable amount. greater of asset fair value less cost to sell of asset value in use. The amount of impairment loss equal to carrying amount minus recoverable amount. The calculation and entry to the impairment loss will be equipment carrying amount, which is 800 by 200,000, which is 600,000. Recoverable amount is 500,000. Impairment loss will be 100,000. So how you book that? December 24, 31st, impairment loss is 100,000 debit, and accrued depreciation in equipment, which is 100,000 credit, which is to record this impairment loss on the equipment. Revaluation model, carrying amount equal to fair value less any subsequent equipment depreciation less any subsequent impairment losses, can only be used in fair value, can be reliably measured. Okay. Only for IFRS, rarely used by any companies. Okay, remember we are already in IFRS. I already adopted IFRS. I remember I work in three companies. Not three companies. The latest one, two companies that I do an IFRS 17 project, which is the Intact Insurance and Travelers Canada Insurance. These are IFRS 17. So this is the standard now in Canada for the risk reporting. Okay. Changes in depreciation method, useful life, residual value, each must be reviewed at least annually. Any changes will cause a revision to depreciation calculation. When a changes is made, depreciation expense for the current procedure is revised. No correction of previous depreciation expense. Example here, carrying amount of the time of change is estimated 11,200. Minus residual value is 700. Remaining depreciable account of time change in estimate 10,500. So it's gonna go back here. Remaining depreciable amount of time divided remaining useful life, which is 3 years, which is revised will be 3,500. So that's an adjustment here when you have to do. Okay. Learning objective number 4, which is to demonstrate how they account for prior PPE disposal. First step to record disposal. Number 1, update your depreciation, which is for the fraction of the year to date of disposal. Number 2, calculate the carrying amount, which is cost minus accumulated depreciation. Number 3 is calculate the gain or loss equal to proceed minus carrying amount, and proceed greater than carrying amount equal to gain. Proceed is lower than carrying amount is equal to loss. And then number 4 is to record your disposal. So cost here minus accumulation, you get a carrying amount. Proceed minus carrying amount, you get gain or loss there. Yeah, gain or loss depends on the money. If it is positive, it's gain. If it is loss, it's going to be negative. Now, retirement for PPE, there's no proceeds are received. They've been accumulated depreciation for a full amount of depreciation and credit asset account for additional costs. If fully depreciated and no loss, if no loss on retirement is equal to the carrying amount of the asset. How are you going to book that? December 31st, accumulate their depreciation equipment 31,200 debit, and then equipment posting 3,200 credit. This is to record retirement of a fully depreciated equipment. And then to record of sales with a gain, and you get a gain here. April 1, cash is 15,000. Accumulated division furniture is 46,920. The gain on disposal will be 1,720 for credit, and furniture will be 60,200. This is to record the sales of office furniture gain. And then exposable entry to record asset with losses. Cash will be 9,000. Accumulated furniture which is 46,920 debit, and loss on disposal 4,280 debit. The furniture will be 62,200. This is to record sales of the full office furniture on a loss. Okay, this is a loss like this. Okay, the previous one is on a gain. Now, acquire changes of PPE. New asset is purchased by trading an old asset. Is standard. If you have an old truck, you're gonna trade it in with the new truck. A trading allowance reduce the cash cost of a new asset. Cash paid equal to the difference between trading allowance and purchase price. The allowance is rarely equal to the fair value, therefore the signal fair value is more relevant. Exchange of PPE, value of new asset. New asset is recorded as fair value of asset given up plus any cash or paid or less or cash received. If fair value of asset given up cannot be reliable, then the fair value asset received should be used. In terms of exchange of PPE and procedures, number one, update any unrecorded depreciation, which is to date of exchange. Calculate the carrying amount of an asset given up, which is the cost minus calculated depreciations. Number three, calculate any gain or loss on disposal, which is equal to fair value minus carrying amount. And number four, to record the exchanges. So exchanges, for example, PPE, retirement here, when it's scrap and discarded here, like when it's sold, if it is sold, okay, and the exchange can be like this. This is a typical standard truck. Retirement scrap, discarded for the truck. Can be sold to another party, you want to sell it to another party, or you're going to be exchange it. Cost of new vehicle will be fair value of old vehicle 3,000. Cash paid for 80,000. Cost of new vehicle will be 46,000. This is a good example. Okay, guys, you scrap it, you sold it, or you exchange it. In October, one posting will be vehicle cost new vehicle for 46,000. Accumulated depreciation of vehicle, old vehicle with T 50,500 debit here, and loss on disposal will be 500 debit. Cash or loss on disposal here debit. Vehicle cost of old vehicle credit 61,000 and cash credit is 43,000. Where you get this? This is coming from here, cash paid. Okay, this is to record an exchange of vehicle plus cash because you have to pay cash on it. Running object number 7, record natural resource transaction and calculate depreciation. This is based usually standing timber, deposit of oil, gas, and minerals. Usually natural resources differ from other long-lived assets because physically extracted, deplete as they are used, replaced only by an act of nature. A good example these days because of the electric vehicle. Indonesia have the largest number of nickel in the world. They control 80% of market share of the nickel industry. This is one of the components being used for making battery. Cost determined as for other long-lived asset include cost of acquiring, preparing asset for use, include asset repair cost and future restoration and cleanup cost. And China is the leading now in the world in making battery related product and power generated product. Depletion of natural resources, unit of production method is used to calculate depreciation. First, calculate the depletion amount per unit, and then depletion is debited to inventory. And then when product is sold, the cost is expensed to the CGS, cost of goods sold. That's the key part. Learning object number 6, identify the basic contract issue or intangible asset and goodwill. Okay, what is that? Right privilege and competitive advantage that have no physical substance, must be identifiable, must meet one of the criteria, can be separated from the company and sold, or based on the contractual or legal right, regardless of whether or not it can be separate from the company. For the accounting for intangible asset will be recorded costs, including costs that make ready for its intended use, such as legal fee and similar. And if intangible asset has a limited life, it is amortized or depreciated over its useful life or legal life, whichever is shorter. The straight line method is often used for this kind of asset. Assets with definite lives are not amortized. Okay, example here, patent and copyrights for with finite lives. Like say, good example is medical field like penicillin and others. Okay. Research and development R&D costs, development costs with probable future benefits are capitalized, and all research costs should be expensed when incurred. A good example, it usually lasts for about 20 to 25 years, then just go to generic for those whose medications, right? The next one, trademark. Trade names and brands. What faces, jingle, symbol, header in the printers or products. Okay, trademarks and trade names value. The value of Hermes bag is different as compared to Old Navy or Gap bag. So Hermes bag can cost an average of $50,000, but the Gap bags or Old Navy bags maybe only 25 to $30. So there's a different trade names and brands. Franchise and licenses. Franchise a contractual agreement giving the franchise right to sell product and use trademark. So the most popular franchise in Canada is Tim Horton. They are the number one leading coffee shop and donut shop. In US will be Dunkin' Donuts. License government grants right to use public property. Goodwill. Let's move on to the next one, which is the goodwill. Is the value of value attributed to the company record only when company is purchased, it has an individual life, not amortized but tested for impairment. Good example of goodwill is a company brand. Example, Toyota has a high goodwill, Honda is the same thing. Let's see how about the other company that has lost its value. Nokia, Motorola, that's one of those company. Or BlackBerry, those company used to be the leader, now is no longer the leader. So the value of the goodwill is down. Learning objective number 7, illustrate the reporting of the long-lived asset. Okay, let me just go back, make sure it's there. Balance sheet, it is PPE, often includes the natural resources. Intangible assets are listed separately as a group. Goodwill is also listed separately. For assets that are depreciated and amortized, the balance and accumulation of major class of assets should be disclosed. Okay. Depreciation and amortization method used should be described. Amount of depreciation and amortization expense for projects should be disclosed. Impairment policy must also be disclosed. The financial statement analysis based on asset turnover will be asset turnover ratio is indicate how efficiently a company is using its asset to generate sales. Net sales divided by total asset equal to asset turnover. Just here, 980 divided by these numbers, 1,036,000 plus 629 divided by 2, you got 1.2 times. Okay, it is efficiency of using the asset to generate sales. Return on asset, measuring of profitability of asset used in earning process. The logic will be profit divided by average total asset equal to ROA, return on asset. In particular, profit 90,000 divided by total asset equal to 10.9%. So this is basically the logic closing the chapter of the long-lived asset. And this is owned by Joe Wiley Plus 2022. Okay, let's conclude this chapter. Hopefully you enjoy. I'm going to post this as well in YouTube and at Puzzle so you can use it on your lecture and practice the questions. Thank you.